Great day and welcome to my third webinar on how to close your books in 3 working days. My name is Tim Homer and I've been consulting for the auto dealers for the last 4 years, 3 of those at NADA. I have 36 years in dealership experience, 28 of those as general manager. I specialize in helping dealers and general managers review each department and provide process change that moves the dealership towards its own profit potential. To do that, you have to have good accounting numbers on a timely basis in order to make adjustments inside the current month to make a difference in your monthly profit goal. My philosophy on closing your accounting in 3 days comes from a belief that the month end is not necessarily a year end. Unless you're a publicly held company, profit or loss does not have to be to the penny. Except on your fiscal year end, 11 months of the year, closed counts. Every schedule does not have to be perfect. Every deal sold but not delivered does not need to be pushed into last month. Let's deep dive into the actual closing process. In my first webinar available on my website under Accounting, you will find my cash process webinar along with a cash management spreadsheet with some important daily and cash management processes you should be using. First, let's look at why I believe in scheduling all balance sheet accounts. You need to know what's in each account and be able to reconcile its balance. It helps to show errors and helps you to find and fix process. It's a great help at the end of the year to give to your CPAs a trial balance as well as a schedule of every account with a balance. A few accounts that have large amounts of entries and zero themselves out, like payroll taxes, I might not schedule as it's sometimes more work than it's worth. However, you do need to make sure the account remains with a zero balance after each payroll. Cleaning each of those schedules should be done at the most appropriate time. Cash, credit card accounts, and contracts in transit daily. After all, this is your cash, your most vulnerable accounts. Accounts receivable twice a month, although I think you should no longer let customers charge. Factory receivables on the day you receive payments. Finance reserve on the day you receive the reserve payment. Payables each Friday as you do your Friday's payables. Also, I would have a signing party on Friday that each manager has to sign off on anything charged to his department. Payroll and payroll payables after each payroll. Also work in process after each payroll. You can watch my work in process webinar on my website as well. Who should clean these accounts? And whoever makes the most entries into them, however anything adjusted, must be approved by management and the cost of the write-off disclosed. You should be looking at anything that had to be written off to see if there is a process that needs to be changed. It's much easier to fix a process than to continually write off profit month in and month out. Believe me when I say when a schedule is cleaned, it costs profit almost every time. When the end of the month comes, you can be assured that every schedule has been cleaned at least once that month. Of course, at the end of the year, every schedule must be cleaned before you finish the year-end process. Did you know that if every asset and every liability account is accurate, then your dealership profit is correct? Maybe the profit's in the wrong department, but your total profit for the year is correct. As the month ends, your controller is reviewing each schedule to make sure someone did touch it during the month and it does not have any glaring old balances in it. They should also be talking to department heads, asking them to close anything that needs closed into the month. Review outstanding sales deals and look at the numbers of vehicle sales and compare that to what you have closed and find out what the difference is. Push service to close outstanding tickets. The cleaner these departments are going into the end of the month, the easier the first working day of the month is. This is also where you need help from the owner or GM in helping to get deals pushed through, and that if a vehicle is not delivered at the end of the month, then it's not a deal for that month. I believe you cannot close in 3 days without complete dealer or GM agreement because you will need their help with sales, F&I, service, body shop, and parts to supply the needed help in getting the information to you on the first business day of the month. I would like to discuss the benefits of a 3-day close. And I'd say 3 days, but I have closed in 1 day before, a 3-day weekend, many times. If it takes 4 days 1 month, not the end of the world. The manufacturer usually requires a dealer agreement that you provide a statement by the 10th, but I've seen in many instances the 15th or the 20th before the statement is produced. My first benefit is to the controller is the month is done and behind you. You're not working 12-hour days trying to get everything done. You're a lot less stressed. You can spend your time managing instead of putting out fires. You're a lot nicer to fellow employees and managers, and your daily operating control can be up to date and more accurate if you're doing deals daily. I'm sure I could add many, many more. Day close begins on the second working day of the month. Because a 3-day close, we are working on schedules at the most advantageous times. Cash reconciliation will be happening daily. This makes finding errors much faster and helps get the EFTs posted daily. It keeps contracts in transit cleaner and makes the end of the month reconciliation a few minutes process. It's also the first step in creating a daily cash flow report that should be out to the owner by 9 a.m. daily. Contracts in transit is also a daily process. Is also part of the cash flow report and needs to be to the owner along with the cash flow report and to the finance manager and sales manager. I suggest every asset and most liability accounts be scheduled so that my end of year report would have a balance sheet and a schedule of what makes up every number. Not every schedule needs to be clean at the end of every month, however. Most schedules need to be reviewed monthly and any discrepancies investigated. That is the power of not rushing through schedules at the end of the month, but thoroughly investigating what went wrong and how do we change that process so it does not happen again. I would assign the person that makes the most entries in a schedule to oversee keeping it up during the month at the most logical time. The most logical time for finance reserves is at the time payment is received, but just don't write off differences if a particular bank is constantly off. Investigate with the finance manager, is the reserve calculating properly in your DMS? We had a bank that the controller was writing off several $100s a month for several years. When I found out and investigated with the finance manager, the reserve that was set up was correctly calculating, but the bank was reducing reserve by 1% if any of the numbers were different than approved. After talking with the bank's buyer, it was a matter of one checkbox in the bank's computer, allow differences on the bank setup, that fixed the problem. They would not go back and fix past differences. They said we should have caught it sooner. Manufacturer's receivable schedules should be reviewed when payment is received or once a week if payments are received daily, as in some warranty receivables. If a warranty is not paid on this round of payments, unless something changes, it won't be paid next one either. Don't let them get old. Fix every unpaid warranty weekly. Work in process should be cleaned after each payroll. Watch the work in process webinar. Payroll taxes, 401k, and insurance should be reviewed when paid. That is when the count should be 0. Inventories is an end-of-month process. New and used vehicles should be reconciled against the actual inventory at the end of the month. Every car touched. They should be reconciled against floor plan, and there should be no unpaid floor plan and no new vehicles not floored, because that is where the vehicles are insured. They should be reconciled with the finance to make sure every deal is closed. New and used inventory represents your largest investment and your biggest debt. Don't you think you should spend a little time each month verifying the units? Parts inventory should be reconciled with accounting on day 1 of the new month. Tires and batteries counted, oil balance estimated, and R12 weighed. This is all money, just in different forms, and must be carefully controlled. I've included a parts inventory reconciliation worksheet on my website under accounting. Deals have to be in accounting the first working day of the month by noon. If it is delivered and finance is waiting for something that they can't finish the deal, I would walk in and get them, have them closed in accounting, and return to finance. This may require a reversal on a rare occasion, and a deal may have to be adjusted in the following month, but that happens now even if you're on a 10-day close. I will say this is where management has to make a decision on when a vehicle counts as sold, a sold policy. I understand that your sales manager, finance manager, and the salespeople want every sale counted in the last month. However, if it's not sitting in a customer's driveway with contract signed, even the manufacturer says it's not sold. I also know how programs work, so if you have NBDR'd the vehicle, go ahead and close it in accounting. But if the manufacturer finds a paper trail that the vehicle was not delivered, they may charge you back for the entire program. If every schedule has been touched last month, and cash, contracts, and all inventories are reconciled on day 1, all deal closed by the end of day 1, cash deposited, you're well on your way to a 3-day close. Day 2, the office gets to go back and work on the current month. The controller starts to finish their checklist of things that must be done, accrual of payroll, verification of commissions, calculating bonuses, reconciling differences between sales grosses and the GL grosses, also balancing F&I and the numbers with GL. All discrepancies to be discussed with the managers. Once all of this is done, we should run a 12-month expense report. Let's break this process down. There are several ways to do your payroll accrual depending on how accurate you want to be. You can actually do an end-of-month payroll and reverse it in the next month. You can do an estimate and enter each month and reverse it the next month. To get rid of the 5th week profit killer, you could accrue 1/3 of the average payroll on months with 4 weeks and reverse the 2/3 on the 5-week months. The easiest is to do a bi-monthly payroll with cutoffs on the 15th and the last day of the month. Then an accrual is completely unnecessary. Verification of commissions. Usually I compare my commissions payable with my sales commissions report. If you're accurate in calculating each commission and adjusting commissions when you adjust a deal, this works. I have saw some pretty elaborate spreadsheets that do commissions that download all sales deals out of accounting, and they seem to be a lot of work, and I believe in the KISS principle. Keep it simple. Calculating bonuses. All bonuses should be calculated from accounting numbers. Your controller should be involved in setting up bonuses to make sure that they can be calculated from accounting and are not so complicated that you need a genius to understand them. Use the KISS principle here as well. Reconcile accounting with sales grosses. Run a front-end sales gross report for new by model and compare these numbers to accounting. For used by vehicle type, research any discrepancies. The controller can make their life so much simpler if any changes once the deal is closed should go to a sales adjustment account. It's not in your chart of accounts and it should be created. For new, it would have a sub-account for every model. For used, it should be a sub-account for each used sale account. The sales manager should sign off on any entry to the adjustment account so there's no surprises at the end of the month. For F&I, you would run a finance report for new and used. You already have a chargeback account. However, I would create multiple sub-accounts under the chargeback account. You should separate miscalculations and bank adjustments from chargebacks, as they are two different problems. And if adjustments go to the finance gross, it makes it harder to reconcile. It also helps when you need to process change. Both sales gross and F&I gross reconciliation should go to the department manager, owner, and GM. We have already looked at parts inventory, but you can do the same gross reconciliation with service and parts and body shop. By doing these reconciliations, we have created a trust between the managers and the accounting staff that rarely exists in a dealership. We have also assured the ownership that your accounting grosses are correct. When we are assured that the sales grosses are correct and commissions posted, we want to review the expenses, and the fastest way to do that is to run a 12-month expense report. You can almost instantly see, 1, are there any expenses missing? Did we not pay rent or DMS expense this month? The account balance is too low. 2, did we pay an expense twice in 1 month? Maybe we paid the next month's expense in this month, or an expense got paid twice. The account balance is too high. 3, we will use this report after we have the books done to review expenses in a manager's meeting to review the managers each expense that might be outside of guide. So now we have a good handle on the balance sheet and the knowledge that each account has been reviewed, at least sometime during the month. We have reconciled cash, credit cards, and contracts in transit. We have verified the inventories, grosses, and expenses in each department. Management should now review the profit and approve the department's profit so we can calculate month-end bonuses. Once calculated and posted, we can enter the month-end memos to produce the financial statement and the tip-in sheet for 20 Group. You should now be ready to send the financial statement to the manufacturer. I would create a checklist of my month-end process and where you get the numbers and what reports you run to finish each job. After you post the financial statement and do the 20 Group tip-in sheet, you should review and verify that the docs, the daily operating controls, match the financial statement. So you know everyone is working with good numbers daily, as each department should have and run their own daily operating control. I have converted several accounting departments to 3-day close, and I know of several others who do it on a consistent basis. I will say, if you have one controller closing multiple dealerships, I would add 1 day for each store closed. I have found the ability to be as thorough when looking at the need to fix a process declines when there are more than 3 stores. The controller is just trying to keep up. I believe you will find this a little more work on day 1, but day 2 and 3 are not hard days. Converting your accounting to a 3-day close and enjoy the benefits. There's a lot of process packed into this webinar, and sometimes it seems an impossible task. Many controllers are not doing some of these processes now, and it's taking 15 days to close. I understand it may look like it can't be done. Even when I come to a store, this is not a 1-day process to implement. When I come into a store to help the controller, I come for 3 days to review process on each balance sheet account. More than a few times I've had to come back to continue working on balance sheet processes. When we have agreed on those processes, I schedule a return visit for a month or 2 later to make sure those processes are in place and working. Then on that same visit, we start the process working towards a 3-day close. Then I come back a 3rd time, usually on the 2nd working day of the month, and we complete a 3-day close. That is to say that even though I know how to do it and can walk the department through the process, it takes 3 to 4 months to complete the first 3-day close. My next webinar will be on accounting and expense control for new, used, service, and parts departments. Thank you for watching.